Let's talk about Vanguard's Energy Index ETF, ticker symbol VDE. In this video, I'll go through that ETF. We'll talk about some of its background, the top companies that they hold, and then we'll go through some of the historical performance. I think the energy sector is really interesting. And at the end of the video, I want to share some of my own personal predictions about the short-term and long-term outlook for this ETF. So hang tight and let's go through this together. All right, so welcome back to my channel. This is Joshua Talks Money, where we talk about all things personal finance and investing. I built and sold a tech company, which taught me a whole bunch about money, and I try to share those lessons that I've learned and the ones I'm still learning with you right here every week. If that sounds good, I would love for you to consider hitting that subscribe button, liking this video, and maybe sharing it with a friend who you think could find it helpful. And with that, let's dive right into this ETF. So this fund was created in 2004 with the goal to track the performance of a benchmark index that basically seeks to the returns on stocks in the energy sector. Now it has an expense ratio of 0.1%. And if you've heard me talk about expense ratios in the past, what this basically means is for every $1,000 that you invest in this ETF, you'd be paying about $1 in fees per year. Now, Vanguard lists this risk reward potential as a very high risk. In fact, the highest level of 5. So there's more risk and more reward. That really just speaks to the fact there's a lot of volatility in this sector and in this ETF itself. So the fund is composed of 103 separate stocks. It has about $7 billion in assets right now. And the top 10 holdings basically represent 2/3 of this ETF. And those are listed over here, which are basically Exxon is the #1 holding, Chevron, which you've heard of, and some other names that might seem familiar in this top 10, Phillips 66, Marathon, etc. If we look at the portfolio composition by sector, you can see the largest piece of this is integrated oil and gas, and then followed up right behind that with oil and gas exploration and production. So if you look at those different areas, it's basically all things, all activities, and the process of the oil and energy business and how that would thrive or decline over time. And you can see this across the board with some of the bigger holdings of this ETF, things like Exxon. Their stock is up nearly 60%, 58.7% in the last year. Chevron is up nearly 50% in the last year. And you may remember Chevron because Warren Buffett did have a sizable purchase in this company a while back. It actually drew some criticism, around kind of ESG and sustainability, but this proved to be a really great investment. So going back to the whole volatility topic, I think it's really important for us to take a look at this ETF's performance over time, because this is super fascinating. In the last year, VDE is up 56%, but the 3-year is just 4.5%. And in fact, 5 years, you're actually losing money from this ETF. And overall, since 2004, this sector has basically provided about a 5% return since its inception. And to me, this makes a lot of sense just because of the volatility of energy and oil as time goes on. And we've seen this over our lifetimes of gas prices and that industry facing ebbs and flows of volatility and pricing and the consumption and supply and demand issues that happen. In fact, this chart here shows the price of oil over the last several decades, and you can see these huge peaks and valleys. It's spiking really around 2008 and then dropping dramatically around the time of the pandemic in March 2020, then creating this meteoric rise over 50%, which we have seen in the last year. Okay, so do I personally own VDE, and what are my thoughts about this ETF in the short and long term? Well, I do not own VDE, and I actually don't plan on it. I think there are a lot of conditions in the market that make this poised for only more volatility. And it's really going to be hard to time when those things happen. So for example, I think there's this impending conflict between Russia and Ukraine. And that is supposed to have a lot of pressure on the supply side of energy, and this would cause prices to increase. And with also the rising inflation that we've talked about on this channel, I just think that is going to have an impact in energy prices on the short term. But if we zoom way out to the big long-term vision, there is this push for electric vehicles. There's been some headlines where you see electric vehicles surpassing things like diesel production for certain vehicles and companies. And that trend, to me, is only going to continue. Do I think fossil fuels are going to be gone? Absolutely not. I believe we'll have a place for them, but there is growing pressure, both from a marketplace standpoint, but also from a government and global government initiative to focus on green energy, renewable energy. And I think that that's something that obviously has put pressure on these stocks historically. So while you all know that I prefer to buy and hold most things that I own, VDE to me does not feel like it would fit into that strategy. It feels a bit more like a swing trade type investment where, if you had the intuition and conviction to invest for certain periods of time, that might be something you'd want to do. I don't want to do that because I'm not good enough at doing such things to make any money. Okay, and so with that, I'd love to know, leave me a comment. Do you think that VDE is a good investment right now, or is it something that you are not going to consider? Let me know in the comments. Let me know if I'm thinking about it the wrong way. I write back to every single one of you and love to engage. That is it for today. If you found this helpful, please like and subscribe. We will be back here in our next video.